All right, welcome everyone. Welcome to one more market wrap with Mr. Pankaj Pandey. And interesting week, sir. It looks like we are playing a ping pong. So one day we go lower, then the same day we come up, and then next day low, and then again we come up on Friday. So, how do we understand this, sir?
So hi, good evening, Vishu. I think one thing is very clear that with the kind of selling what we have seen in the past few weeks, markets are clearly in oversold conditions. And if you look at key indices, like for example, Bank Nifty has corrected by 8 odd percent. Till from last year, say March 2023, it has a tendency to correct about 9 odd percent, and from there the bounce back happens. IT also has seen a correction of about 8 weeks. The market breadth is also sort of quite negative. So number of stocks below 50-day simple moving average that has come down to 12%. And I think what we are clearly seeing is the kind of sell-off what we have seen is clearly sort of highlighting the oversold conditions. And from there, from these oversold conditions, we expect some pullback on the cards. Friday, we have seen one of these days. And I think if it gets followed up in subsequent events, then our sense is that overall this pullback could be towards levels like, say, 24,500, and supports have been taken at 23,200. So that way, I think pullback is it would be fruitful. That is what we will sort of conclude. But in general, most of your bigger indices, be it IT, be it banks, they are sort of looking a lot more better and constructive. And on top of it, I think we all know that FI have been on a selling spree. So since September, they've sold about 1.5 lakh crores. And typically, the trend has been that they've been selling at about 4,000 odd crores on a daily basis. Good part is that this has sort of come down to under 2,000 odd. And in fact, on Thursday, despite the Adani news, I think if you sort of exclude the Adani group led stocks selling, I think of the 5,300 odd, 4,000 pertain to the Adani Group stocks only. So, in general, the overall intensity of selling is definitely coming down. And I think there are a couple of positives as well. Monday, you'll have MSCI rebalancing, so $3 billion kind of inflow can happen. And hopefully, if the election outcome is positive and market does a follow up, then I think we would want to believe that a durable bottom is in place. But yes, volatility is going to be there, so bottoms don't get made in a very stable scenario. But yes, pullback is definitely much expected and is being witnessed today, and hopefully next week as well.
Absolutely, sir. I think you already mentioned the Adani Group saga that's been playing along. I think that is one of the biggest news that's been going around lately. What do we have to say on this, sir?
So I think if we, well, yes, it's been widely covered, so I would not really go into specifics. But broadly, the Department of Justice has accused Mr. Gautam Adani of 2,110 crore of bribery case, along with two of the other board members. And post this news, we have seen a massive decline in most of the Adani Group stocks in the range of 18 to 20 odd percent. However, the company has, or the group has denied and is would be looking at a legal recourse. Now, our sense is that this is not something which has happened to one company globally. We have seen ample examples of these kind of allegations being leveled against a number of reputed names. Now, one of the precedents also is to sort of settle these by paying fines, so which is obviously a recourse available, or which would be available in due course of time. But having said that, it does impact the overall near-term outlook, especially because the kind of funding requirement the group has. And obviously, it raises concerns on the growth side, and which is why there is a decline. But having said that, not all group stocks are covered by us. So in this decline, what we're clearly liking is the cement pack, both Ambuja Cement and ACC. Largely because, see, when you look at any company, the maximum value of that company resides in terms of what happens to the company in the future. But in case of hardcore assets like, say, Ambuja and ACC, I think we have these tangible assets with better growth prospects. So we would want to believe that these companies should be or can be bought into the kind of declines what we have seen. Because we are purely going on the merit basis largely because when you look at Ambuja, for example, aims to have a capacity of 140 million tons. They are at about 98 million tons. Next year, they're looking at about 118 million tons. So from that perspective, there is a fairly good amount of growth prospect lined up. And this growth is not going to get hampered because this company has got a cash and bank balance of about 10,000 odd crores. So I think in this way, while the group can solve problem by paying penalties, because see, a lot of these litigations are very difficult to prove and can take a lot of time. But yes, there is another way of paying penalty and sort of moving on, which has happened in a number of cases. But having said that, specifically what we are liking in this overall correction within the Adani Group stock, the likes of Ambuja with a target price of 690 and ACC with a target price of 3,225.
Absolutely, sir. During this episode, I think the lenders were affected somewhat during the week. So what's your view on that?
So yes, see, the overall concern is that the gross debt of Adani Group companies is somewhere about 2.4 lakh crores. But our sense is that there is no systemic risk to the lenders because when we say this is that, see, of this overall gross debt of 2.4 lakh crores, 35-36% is what is the Indian debt. And of this, roughly 75,000 odd crores. And of this, 90% of the debt is split between banks and NBFCs. Now, coming specifically to banks, which are systemically more important, if you look at individual bank-wise, none of the banks have got exposure below or above 1%. So from that perspective, it does not really pose much of a challenge to the banks. And I think overall, our sense is that the kind of weakness what we have seen in PSU banks was unwarranted, and which is why we feel that, especially PSU banks, given the fact that the overall pipeline of advances is quite strong, their liability franchise is good, their credit cost has been sort of steady. So we prefer PSU banks which have declined. So, for example, SBI with a target price of 1,000 or Bank of Baroda with a target price of 300. So we don't see a bigger risk emerging from even if there was some stress in the book of the Adani Group companies.
Absolutely, sir. Talking about things which were not impacted to an extent, I think during this 11 odd percent fall that we saw in Nifty, IT was a sector which was relatively less scared, not unscathed, but less scared, with a fall of around 4.5%. So what's turning out in this sector?
IT, I think, at least in the Q2, what we have clearly seen is that there has been a renewed vigor in terms of the overall deal momentum. So July and September, we have seen about 60 deals getting signed, and I think this is a significant increase compared to the previous quarters, and clearly highlighting that the BFSI sector in North America is up for revival. And I think key players which have done well is Infosys and Accenture, and Cognizant has also won decent amount of deals. And I think the pipeline also remains stronger, though second half for IT companies is sort of bit peakish. But we have seen even in October about 16 deal wins. And on top of it, good part is that US, there is a good expectation of a rate cut, corporate tax cut to happen. And that should possibly lead to a double-digit kind of a growth recovery in FY26 for IT companies. So from that perspective, IT outlook is not dented so much from this overall market mayhem, and which is why I feel that some of the stocks like say Tech Mahindra with a target price of 2,000 or Sonata Software, Newgen or First Source. Now, some of these companies are talking of a decent amount of revenues coming from the AI front as well. So I think all these companies relatively look attractive to us. So within tier one, it will be Tech Mahindra, and in tier two, like I said, Sonata, Newgen, and First Source look attractive to us.
Absolutely, sir. Another important factor that gets tracked is the government spending, which gives a momentum to the markets, of course. What has been happening lately around government spending, and what are expectations from here on for that?
So I think, Vishu, the challenge has been that we had election and then the budget got passed later. And I think mid of August is when the budget got passed. And after that, we had monsoon. So first half was clearly relatively lesser amount of capital expenditure being done by the government. And that is clearly reflected in the numbers. So in the first half of last year, of the overall budget amount of about 10 lakh crore, 49% was spent in the first half. But this time we have spent about 37 odd percent. So definitely lower than last year. And I explained reasons also. Now, when we sort of look at numbers, so till September or April to September, monthly capital expenditure was about 60,000 odd crores. A good part is that in the month of October, this number nearly doubled to about 1.1 lakh crores and is likely to sort of remain there. And our sense is that once this Maharashtra election outcome happens, the second half, you'll see the capital expenditure gaining momentum. So if we were to maintain the same run rate, then likely it is very much likely that we could be achieving 90 to 95% of the budgeted capex of 11 lakh crores. So from that perspective, I think we could see capital expenditure back on track. Now, segments which are going to benefit us one roads, then you have power and in power, especially power transmission and distribution, water, building factories, renewable. And I think this could also probably lead to a revival in the private sector capex as well. With that in perspective, we are clearly liking the infra players and the capital good companies. So L&T, NCC, Engineers India, Ultratech Cement, Star Cement, Astra Microwave, and Hindustan Aeronautics. So these are the companies we would prefer with the perspective that in the second half, we'll see a capital expenditure revival.
Absolutely. I think, sir, the festival season has just concluded, and we have been watching over the weekly wraps as well. We have been tracking how auto sector has been performing and what are the expectations building around it. So what did actually pan out here?
So, Vishu, when you look at the festive period, it's a 42-day period which starts from first day of Navratri and till 15 days post Dhanteras. And according to FADA, the festive season was pretty good. Overall sales for auto grew by 12 odd percent. And I think two-wheeler as a space did very well with a 14% kind of a growth rate. For PV, the overall growth rate was 7%. And I think numbers were stable for CV. And I think within companies, if you look at, I think festive season was pretty good for iSure. And Maruti also did quite okay from that perspective. But what we're clearly liking is Mahindra and Mahindra because next week they'll be launching their two EVs. On top of it, this is one company which is quite capital conscious. So they're looking at improving their ROEs to 18 odd percent. And iShare we are liking because there is a volume recovery and it's a good premiumization play. So there we have a target of 5,730. So from that perspective, festive season did well. And I would also want to highlight that you have a marriage season going on, which again is also very positive for the entire auto as a pack, especially two-wheeler and four-wheeler. And up till now, things have been pretty good. So once this marriage season gets over, we'll again take a review of the situation. But what it has done is that one of the concerns with the industry was the higher inventory. I think that has sort of corrected. So one of the key concerns have been addressed because of better demand in the festive season.
Absolutely, sir. I think another good development has been the restoration of PM E-Drive scheme. Would you say?
I think so. On the demand side, Vishu, the demand has been pretty good for the three-wheeler, electric three-wheeler, and so while the government was expecting that 80,000 units will get sold in the entire year, but so the industry has already sold it, and which is why the government is saying that whatever subsidy they were likely to give next year, they have taken it to this year. So subsidy per unit has come down from say 50,000 to 25,000. But good part is that there is a good demand and things are sort of doing very well, especially for three-wheeler. And it is definitely positive for incumbents like say Bajaj Auto, M&M, and even a smaller company like Atul Auto. So from that perspective, I think there are some pockets which are doing well in the EV side as well.
Right. On the similar lines, while we are extending the subsidy, I think China has taken it away for aluminium exports. So that also looks like a good news for us.
Absolutely. I think China has been struggling a lot, and we all know that they've been sort of dumping not only ferrous, non-ferrous metals as well, and which is why the aluminum as a segment was also impacted. The good part is that starting from 1st of December, they are cutting down the export tax rebates which they were giving to their companies. And as a result, the expectation is that the exports will come down. If you look at what has happened in this year is that from Jan to October period, their exports had grown at about 17 odd percent, and which is why the overall prices were sort of depressed. And when this news came out, the prices shot up by 8 odd percent. Now, this is definitely positive news for our companies, especially the aluminium companies like, say, Hindalco, Vedanta, and Nalco. And I think what we like is more of Hindalco because not only it's a play on the domestic story, but it is one of the few companies which is expected to do well from US government spending there. So from that perspective, this is one stock which we like with a target price of 800. I think with the issues ongoing in China, I will not be surprised if we get further positive news related to our metal sector. I think this is one sector which has been struggling for a lot of time, and hopefully, I think if China does not sort of do dumping, I think that this sector will also witness a revival, and aluminum is the starting point as of now.
Right. Moving on to another sector, how have hospitals been doing lately?
So hospital is considered to be a secular growth story, and I think this particular quarter they've not really disappointed from that perspective. So we cover about 4 5 companies, the likes of Apollo Hospitals, Narayana, Rainbow, HCG, Shalby. So all these companies have seen a 14% kind of a growth rate, and one largely because of the occupancy, and then there has been a bit of an increase in the rates. And I think bed addition has been about 5 odd percent. EBITDA growth is about 13 odd percent because some of the hospitals got impacted because of the heavier rains. A good part also is that most of the metrics are improving. So you have a better pay mix. So more of insured patients are sort of availing insurance. So that is definitely positive for hospitals. Even the case mix is better. So you are seeing more of critical surgeries such as organ transplants or cardiovascular surgeries. So that is also good. And I think last few years of 5 7 years back, whichever hospitals have opened, I think they are overall turning quite profitable and ROCs have been good. And I think, like I've been highlighting, this sector is continuing to do good amount of capex. So next 3 years, the sector is increasing the capacity by 30 odd percent. So I think this is one sector which I'll not be surprised if it continues to deliver a good double-digit kind of a growth rate on a sustained basis, and which is why we like this sector more than FMCG. And I think what we like within this is something like Narayana Hrudayalaya, which is with a target price of 14.
Absolutely. And finally, getting to the final segment of day, hidden gem of the week. Which will it be this time?
So post elections, we are expecting some revival in the overall capital expenditure by the government, and which is why I feel that infra companies can benefit. On top of it, I think there is also a positiveness building up in terms of RBI cutting rates, with the comments, especially coming from FM. So I think overall sense is that infrastructure as a segment should do well, and the company which I will recommend is Ahluwalia Contract with a target price of 1160. Now this company has seen a nearly 40% kind of a cut in this market volatility, and without much of a damage to its fundamentals. Now this is one company which is net cash positive, and this company operates across various domains. So, for example, residential complex or commercial complex or hotels. So, for example, it's a key contractor for ITC, hospitals, railway stations. So, they're undertaking Chhatrapati Shivaji terminal redevelopment. So, this is one company which has got a good order book of nearly say 16,000 odd crores. So about a 4 time book to bill ratio is what they've got. This year they've got orders of about 7,800, and they are expecting another 1,000 crore kind of order. But I think what has happened in this year is that because of shortage of labor, then we had large projects. There was a delay in the design approval, plus extended monsoon. So margins and execution got impacted, and which is why the company has lowered the overall revenue guidance to say 15%. Earlier, the guidance was 15 to 20 odd percent, and now they expect 20% kind of a growth to happen in FY26. On top of it, I think margin profile they were expecting to be better. So now overall sense is that margin will be about 9%, which was the earlier expectation was double digit. Now the margin will be 10.3% next year and 11% in FY27. So things have got pushed back by about 6 odd months. And but the kind of correction what we've seen, we feel that the stock is good stock with that, and also the kind of overall balance sheet if you see, because this company makes a ROC of 25%, so among the best or the highest ROCs within infra companies. And with the kind of correction it has seen, we feel that it's a right time to buy this stock in anticipation that next 6 months things are going to be a lot more brighter on the Capex side.
Right. Right, sir. Well, that was our time. Thank you so much, everyone, for watching. If you have any questions, please don't forget to put them down in the comments. We'll be back next week with another app. Thank you so much for your time, sir.
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.